Welcome to the Deep Dive. Today we're jumping into a really fascinating space where cutting-edge tech meets something super fundamental. Real estate.
Right.
We're talking blockchain.
Yeah.
You know, the tech behind crypto, but its core idea is decentralization, transparency, security. Well, they seem poised to really shake up how we handle property.
Yeah, absolutely. And that's our mission for this deep dive, right? To explore how blockchain is actually getting woven into real estate. What are the real benefits? What applications are popping up? And importantly, what are the hurdles we still need to overcome?
And for you listening, if you want to get up to speed on this quickly, really understand it without getting bogged down in like super technical jargon.
That's exactly what we're aiming for, a shortcut to understanding this complex topic.
Okay, let's do it. So maybe start at the beginning. What is blockchain, basically, and how does this digital thing connect with, physical bricks and mortar?
Fundamentally, blockchain is a type of digital ledger. Think of it like a shared notebook. But instead of being in one place, it's copied across lots and lots of computers in a network.
So decentralized.
Exactly. Decentralized.
Yeah.
And the crucial part is immutable. Once a transaction, say a record of sale, is added and verified by the network, it's incredibly difficult to change or delete it. It's locked in.
Okay.
Now, apply that to real estate. The potential impact is, well, huge. We're looking at changing how properties are bought and sold, verifying who owns what, even breaking down big assets into smaller tradable pieces, that's tokenization, and making property management way more efficient.
Right. So instead of one central database, like at a land registry office or whatever, the info's spread out and secured everywhere.
Precisely.
Now, you mentioned something really interesting, smart contracts. What's the deal with those in this context?
Smart contracts.
Yeah.
They're basically self-executing agreements. The terms, the rules of the deal are written directly into code on the blockchain.
Code.
And because they live on the blockchain, they can automatically enforce the agreement once the conditions are met. No need for a middleman to check things off.
So give me an example in real estate.
Okay, think about buying a house. A smart contract could automatically transfer the digital ownership record as soon as it confirms the buyer's payment has arrived.
Wow. Okay.
Or it could manage escrow funds, releasing them automatically at the right time. Or even rental agreements, automating monthly payments, maybe even handling late fees based on the coded rules.
That sounds like it could cut out a ton of paperwork and delays.
That's the promise. Less friction, fewer intermediaries.
So let's dig into these benefits more. First one you mentioned, increased transparency and efficiency. How does blockchain actually deliver that?
Well, it's that combination, isn't it? The immutable ledger, the decentralized network, and the fact that transactions are often publicly verifiable.
Right.
It creates this shared, trusted history of a property. Who owned it when it sold, any liens?
Right.
It's all recorded and, crucially, can't be secretly changed.
So everyone sees the same thing.
Everyone sees the same verifiable history.
Yeah.
This massively reduces the risk of fraud, forged documents, that kind of thing. And it builds trust.
And the efficiency part, speeding things up.
Yeah, that comes largely from the automation via smart contracts, electronic title transfers, automated checks. It removes a lot of the manual steps, the back and forth.
Cutting down administrative costs too, I bet.
Exactly. Less paperwork, fewer manual checks, faster processing.
Right.
It all adds up.
Okay, next big one. Enhanced security and reduced fraud risk. Real estate fraud is a major worry. How does blockchain tackle that?
It comes down to the cryptography baked into the system. Really sophisticated stuff.
Like what?
Things like cryptographic hashing. It's like creating a unique digital fingerprint for data. Change even a tiny bit of the data, and the fingerprint changes completely.
So you can instantly tell if something's been tampered with.
Instantly. And then you have digital signatures, which use private keys to prove that only the authorized person initiated a transaction or approved something.
So combining those makes it incredibly hard to fake documents or transactions.
Very, very difficult. It adds layers of security that are much harder to break than traditional paper-based or even centralized digital systems.
Okay, that's compelling. Another point you raised was expanded accessibility, making real estate investment easier to get into. How?
Two main ways, really. First, think about cross-border deals. Using cryptocurrencies or stablecoins on a blockchain can bypass a lot of the usual currency exchange hassles, fees, and delays.
Interesting. Makes international buying smoother.
Potentially, yes. And secure crypto wallets, like, say, Binance Wallet, help manage those digital assets safely. But the really revolutionary part is probably tokenization.
Right, breaking property into digital pieces.
Exactly. You convert the ownership of a property into digital tokens on a blockchain. Each token represents a small fraction of ownership.
Like shares in a company, but for a building.
Sort of, yeah. So instead of needing, millions to buy a commercial building, you could potentially buy just a few tokens representing a small stake.
So people with less capital can get involved from anywhere.
That's the idea. It opens up investment opportunities that were previously locked away for institutional players or the very wealthy. It makes it more inclusive.
That is a game changer. Suddenly you get on a tiny piece of prime real estate in another country.
Potentially, yes. Creating a much more diverse portfolio for individuals.
And this ties into the next benefit you mentioned. Improved liquidity. Real estate is famously illiquid, right? Hard to sell quickly.
Notoriously so. Selling property takes time, involves complex processes, high costs. It's not like selling stock.
So how does blockchain help?
By turning those property assets, or fractions of them, into digital tokens. Well, those tokens can potentially be traded much more easily.
On special exchanges.
On blockchain-based decentralized exchanges, or DEXs, these platforms allow peer-to-peer trading of tokens.
So you could sell your tokens faster than selling the whole building.
That's the hope. It creates a secondary market for these fractional ownership stakes. And when you want to cash out completely, you could potentially convert those property tokens into a cryptocurrency like Ethereum, and then into regular money, fiat currency, via established crypto exchanges. Using stablecoins can help manage volatility during that step.
Right, because crypto prices can swing wildly. Stablecoins are pegged to, like, the dollar.
Usually, yes. So it provides a more stable bridge back to traditional currency.
Okay, so we've covered the why, the transparency, security, accessibility, liquidity, some really strong arguments.
Definitely.
Now, let's pivot to the how. We've seen the benefits, but how are these actually being used? What are the key applications we're seeing emerge in real estate? Property transactions and smart contracts seem like the obvious starting point.
Absolutely. And it's happening. We're seeing platforms emerge, like crypto real estate is one example, that list properties where you can actually pay with cryptocurrency.
So direct crypto payments are becoming a thing.
It's starting, yes.
What?
But the deeper impact is the automation from smart contracts. Imagine purchase agreements that automatically trigger the ownership update on the ledger once funds are confirmed.
No more waiting for lawyers and agents to shuffle papers.
Potentially much less of it. Or think about escrow. A smart contract could hold the funds and the title representation, releasing them simultaneously when conditions are met. It replaces the need for a traditional escrow agent. Even rental agreements, automating rent collection, applying pre-agreed late fees, maybe even managing security deposit returns, or, in some cases, initiating steps outlined in the contract if rent isn't paid.
That level of automation. Yeah, it could
Fine.
streamline things massively. What about the absolute bedrock? Title and ownership records. Can blockchain fix the issues there?
This is a huge potential area. Blockchain offers a way to create title records that are essentially tamper-proof and transparent.
Because they're immutable and distributed.
Exactly. Once ownership is recorded, it's incredibly hard to alter it fraudulently. And the records can be easily accessed and verified by authorized parties, or even publicly in some models.
Which should cut down on title fraud and disputes.
Significantly, yes. It provides a much clearer, more reliable chain of ownership.
Okay, a more secure foundation. Now, we keep coming back to tokenization. Let's dive a bit deeper. How does that actually work? If I have a building, how do I tokenize it?
Well, the process generally involves legally structuring the deal, then using a specialized platform to essentially issue digital tokens on a chosen blockchain, like Ethereum, for instance. These tokens legally represent ownership shares in the underlying asset.
And people buy these tokens.
Yes. Platforms like Realty are doing this for U.S. rental properties. Meridio focuses more on commercial real estate. Fundrise uses a rates, but is exploring blockchain too. RealBlocks connects advisors to these kinds of alternative investments.
So investors buy tokens, maybe get rental income paid out via the platform.
Right, or benefit from property value appreciation. It allows fractional investment without the burden of direct ownership or buying the whole asset.
Creating that more liquid, accessible market we talked about.
Precisely.
What about due diligence, the painful process of checking everything about a property before buying?
Blockchain can help there too. By having a transparent, immutable record of a property's history ownership changes, liens, maybe even permits or zoning info, all stored on the blockchain, it can make that verification process much faster and more reliable. You can trust the data more because it's harder to fake or hide things, reduces fraud risk during diligence.
Makes sense. Less digging through potentially messy paper trails.
Yeah.
Now, you also mentioned DeFi, decentralized finance. How does that fit into real estate?
Yeah, this is where it gets quite advanced. We're seeing early concepts, sometimes called decentralized real estate exchanges, or DRX.
DRX.
The idea is to create platforms for peer-to-peer trading of these tokenized real estate assets, cutting out traditional brokers or exchanges.
So I could trade my property tokens directly with someone else.
That's the vision. Using the blockchain for secure, transparent settlement and smart contracts to automate the actual swap of tokens and payment. It could potentially open up a truly global market for fractional real estate.
Interesting. Cutting out more middlemen. We also touched on automated rental payments. How seamless could that be?
Pretty seamless, in theory. You code the lease terms into a smart contract rent amount, due date. On a due date, the contract automatically attempts to transfer the agreed amount
From the tenant's wallet.
from the tenant's linked wallet, whether crypto or potentially linked traditional accounts, directly to the landlord's wallet.
And it creates an automatic payment record.
Instantly. And it's an unchangeable record on the blockchain. No disputes about whether rent was paid or not. Eliminates collection hassle, provides proof.
Okay. Mortgages and loans next. That's a notoriously complex area. Can blockchain simplify lending?
It has the potential to, yes, from application to approval to repayment. A shared, transparent ledger can give all parties, borrower, lender, maybe even regulators, a clear view of the loan status and history.
In smart contracts again.
They could automate things like income verification, credit scoring based on predefined rules, interest calculations, even triggering actions based on payment status.
Could it also make loans cheaper or more accessible?
Potentially. By reducing administrative overhead, costs could come down, and blockchain might enable new models, like multiple investors funding a single mortgage, increasing liquidity in the mortgage market itself.
Wow, it really seems to touch almost every part of the industry, even things like crowdfunding.
Oh, yeah. Tokenization is a natural fit for real estate crowdfunding platforms, or REITs. It allows them to issue fractional ownership easily as digital tokens.
Making it easier for investors to buy in and trade their shares.
Exactly. More flexibility, potentially better liquidity for investors, and simpler administration for the platform operators issuing tokens, distributing dividends, etc. can be streamlined.
What about property auctions? Any role for blockchain there?
Definitely. It can bring more transparency and efficiency. Imagine real-time bidding recorded immutably on the blockchain. Secure transaction settlement.
And smart contracts could finalize the sale automatically.
Right. Once the winning bid is confirmed and payment conditions met, the smart contract could execute the transfer. It ensures a tamper-proof auction record and could potentially attract more bidders globally because of the increased trust.
It's not just the transaction side, is it? You mentioned supply chains earlier, like in construction and development.
That's right. Think about managing a big construction project. Lots of suppliers, contractors, payments.
Complex.
Very. Smart contracts could automate payments based on project milestones being verified. Blockchain could create a reliable reputation system for contractors based on past performance recorded on-chain. It could streamline procurement and project management.
And one last area, maybe less exciting but vital.
Right.
Regulatory compliance. KYC, AML.
Crucial, yes.
Yeah.
And blockchain can help. Its ability to create transparent, auditable, and immutable records is really valuable here.
Oh.
You could use smart contracts to automate the collection and verification of data needed for Know Your Customer, KYC, or anti-money laundering, AML checks.
Providing a clear audit trail for regulators.
Exactly. A clear, unchangeable record that proves compliance steps were taken. This reduces manual reporting burdens and helps avoid potentially hefty fines.
Okay, the potential applications are incredibly broad.
Right.
It really seems like it could reshape the entire landscape.
The potential is definitely there.
But there's always a but, right? With any powerful new tech, there are challenges and risks. What are the main hurdles for blockchain in real estate?
Yeah, absolutely. It's not all smooth sailing.
Yeah.
One of the biggest right now is definitely regulatory uncertainty.
The laws haven't caught up.
Pretty much.
Yeah.
Lawmakers and regulators are still figuring out how to handle blockchain, smart contracts, tokenized assets. This gray area creates risk and hesitation for businesses wanting to adopt the tech.
Makes sense. What else?
Technical complexity is another one. This isn't simple stuff. You need specialized knowledge to build, implement, and manage blockchain solutions.
So a skills gap for traditional real estate folks.
It can be, yeah. And then there's just plain old resistance to change. The real estate industry has operated a certain way for a long time, getting widespread adoption and integration across all the different players. That takes time and effort.
It almost reminds you of the early internet, doesn't it? Similar adoption hurdles and regulatory questions back then.
It's a fair comparison in some ways. There's
Yeah.
definitely an education curve and a need for standards to emerge.
You also flagged scalability and data protection.
Right. Scalability can be an issue for some blockchains, how many transactions they can process per second, especially during busy times. That's improving, but it's a consideration.
And data protection, like GDPR.
Yes, that's a tricky one. How do you reconcile the right to be forgotten under GDPR with an immutable blockchain record where data can't easily be deleted?
Yeah. How do you delete something that's designed not to be deleted?
Exactly. There are potential workarounds like storing sensitive data off-chain and only putting hashes on-chain, or using encryption, or adding correcting entries rather than deleting. But the legal interpretations are still evolving, especially around who counts as a data controller or processor in a decentralized network.
So navigating privacy laws is a significant challenge.
It really is.
And one more risk, you mentioned the smart contracts themselves. They are foolproof.
No, they're not. They are code, and code can have bugs or vulnerabilities. If there's a flaw in a smart contract's code, it could potentially be exploited by bad actors, putting users' funds or assets at risk.
So rigorous auditing and testing are crucial.
Absolutely critical. You need high assurance that the code does exactly what it's supposed to do and nothing else.
Okay, so real challenges. Regulatory, technical, adoption, data privacy, contract security. Quite a list.
It is. But none of them seem insurmountable, necessarily. More like challenges to be worked through as the technology matures.
So despite those hurdles, what's the general feeling about the future? Where's this heading?
The outlook is generally very positive, actually. Market projections for things like real estate tokenization are huge, talking trillions of dollars within the next few years. Some analysts even think tokenized assets could make up a significant chunk, like 10% of global GDP by 2030.
Wow, 10%. That's massive.
It's ambitious, but it shows the perceived potential. And the underlying blockchain tech itself is constantly improving.
Faster transactions, better privacy.
Exactly. Things like Ethereum moving to proof of stake, layer 2 solutions like rollups, sharding. They're all aimed at increasing speed and capacity, and new cryptographic techniques like zero-knowledge proofs are emerging to enhance privacy, letting you prove something is true without revealing the underlying data.
So the tech is getting better, faster, more private.
Continuously. And we're seeing adoption grow just in terms of, like, people using crypto wallets, merchants accepting crypto. The user base is expanding.
And more projects launching.
All the time, across different industries and parts of the world. We might also see more use of hybrid models combining public blockchains for transparency with private permissioned ones where you need more control or oversight, maybe for KYC compliance.
What about handling the legal side alongside the code?
Yeah, that's evolving too. One approach is using the blockchain for what it's great at: provable record keeping, time stamping while keeping the complex legal clauses in traditional human-readable contracts off-chain, but securely linked to the blockchain record, perhaps via a hash.
So using the best of both worlds.
Kind of. And beyond just real estate, you see huge potential in related areas like global trade automating customs, invoicing, bills of lading between multiple parties, or trade finance improving transparency, reducing fraud.
Even governments getting involved.
Potentially, yes. Public authorities could participate in permissioned blockchains for things like automated customs clearance or duty payments, making cross-border trade much smoother.
It really paints a picture of a future market for real estate, and maybe more, that's much more efficient, transparent, global, and accessible.
That's certainly the long-term vision driving a lot of this development.
Okay, let's try and wrap this up.
Yeah.
If you had to boil it down, what are the key takeaways for someone listening about blockchain in real estate?
I'd say the core takeaway is the sheer potential. Blockchain technology really does offer the possibility of fundamentally improving the real estate industry, making it more transparent, more secure, much more accessible to investors through things like tokenization, and more liquid thanks to smart contracts and new trading platforms.
But with caveats.
But with caveats, absolutely. It's crucial to remember the challenges are real. The regulatory landscape needs to solidify, the tech needs to be user-friendly and robust, the industry needs to embrace the change, and issues like data privacy and smart contract security need careful handling.
So huge potential, but still hurdles to clear.
That sums it up pretty well.
All right. And on that note, maybe a final thought for you, our listener, to chew on. As blockchain keeps evolving and weaving itself deeper into real estate, how do you think individual investors like yourself or even traditional real estate businesses might need to adapt? What strategies will be needed to really benefit from this shift? And maybe even what completely new opportunities, things we haven't even considered today, might pop up as this technology matures. It's definitely something to think about the long-term impact on how we all buy, sell, and invest in property in an increasingly digital world. Thanks for joining us for this deep dive.